Well, hello everyone and welcome to Moementum channel. My name is Mo, and in this video I wanted to share why my wife and I have over 90% of our portfolio invested in one single ETF. For those of you who've been following our journey, you know that my wife and I are working towards reaching early financial independence within the next decade. It still would get us to our late 40s by the time that we hit that target. And one of our main approaches to getting there is through investing in the stock market passively through the power of actually low cost index fund. And one of those index funds that we have in our portfolio is considered to be an all-in-one ETF. We are based in Canada, so this one is the ticker symbol XEQT. A lot of folks now have been asking us why we are putting so much money into that one single ETF. Is that actually safe? And is it actually considered even a diversification? They think about like, it's just one single ETF. How prudent is that to put in our case, over $700,000 invested in that single ETF? Is that really wise? And the answer to that is really lies down to I think the underlying kind of characteristics of this single ETF. But before I dive into it and provide some of that clarity, I wanted to quickly share with you where our portfolio stands as we see as of the time of making this video. Currently, our portfolio size is over $809,000. Majority of which, as I pointed out, is in shares of XEQT. As you notice, if I hover inside it, you do see that close to 90% of our holdings is with XEQT. You can also see here on screen how much gain we've had in terms of investing in this ETF. We've been putting money into this ETF, I would say around 15 months or 16 months ago. Before that, we were investing separately in different ETFs or stocks, but the returns that you see here is essentially since that time that we started switching to XEQT as our main holdings. You've also noticed that we've earned close to $10,000 in dividend income so far, and all of them have been reinvested back into the same shares of XEQT. Currently, we have over 21,000 shares of it, showing overall return of close to 28 point, I would say if you look at it more accurately, close to 28.9%, of which 27.2% is based on price gain, 1.7% on top can be added in terms of dividend, and the total would be close to 29%. Our next big other holdings are VTI and VT. We hold these ETFs, both of these VTI and VT, in our RSP accounts. Now, main reason we started adding them to our RSP account a while back was trying to minimize on our taxation when it comes to withholding tax for US particular dividends. But at one point we decided we are going to switch and continue to add more to our shares of XEQT because we were not really being able to find a cheaper way through Wealthsimple to buy these US dollar funds without having to pay some sort of a conversion fee. That's why we still maintain these shares close to, as you see, $52,000 invested in VTI and another $28,000 in VT. But we are not necessarily actively adding too much more to these funds. And lastly, one of the new additions we've had is some more exposure to US through NASDAQ. This is very small exposure, less than 1%. We have around 37 shares of HXQ, which, as the name suggests, gives us exposure to NASDAQ 100. In order for us to understand better why we've selected shares of XEQT I wanted to kind of elaborate on what is so unique and special about this one. With XEQT, it is considered an all-in-one ETF. What it means is that by simply investing in this single ETF, we are already getting diversified exposure to the stock market globally, including stocks in Canada, US, international markets, as well as emerging markets. In terms of underlying holdings of XEQT, it consists of 4 different ETFs, and those ETFs essentially gives us that exposure that I talked to you about: the US total stock market exposure, the Canadian Toronto Stock Exchange exposure, East and Far East international exposure, and emerging markets. If you look at the aggregate underlying holdings, this consists of over 8,000 companies worldwide. On top of the list, you see major companies such as Apple, Nvidia, Microsoft, Royal Bank of Canada, Amazon, Shopify, Meta, Toronto Dominion Bank, Enbridge, and Brookfield. These are the top one in terms of the weightage. But like I said, 8,000 companies worldwide. And you can easily, if you are interested, you get to actually download this list and download list of holdings, which gives you a CSV file. You can go through them in detail. But if you're interested, let's take a look at high level some of the additional pieces that I just pointed out. I bring to your attention here the fact that we were talking about the global diversification. The number of companies is also mentioned here. Number of underlying holdings as of the end of November, close to the end of November, was 8,800 different holdings. So that's really, really major numbers. Tells you why we consider this not a single holding per se, and that's why it's safe. You're already getting exposure globally to the entire US stock market. This fund has done actually quite decent, and given the global diversification, I think from a volatility perspective as well, you have a little bit of that safer cushion because it's more diversified globally. Looking at the past return at the end of, let's say, the last timing period, as the end of October, whereby this data was available, a 1 year return was showing to be at 32%. 3 year annualized return was at 8.7%, 5 year annualized return of 11.8%. Quite impressive. And its return annualized since its inception is at 12%. If you look at the return based on calendar year, you're also noticing how their best year was in 2021 at 19.6%. And the worst year was 2022 at negative 10.9%. Cumulatively, you can see since inception for this fund, you're seeing a positive return of close to 82%. And the inception date for this fund goes back to August 7th of 2019. In terms of the fee, what you're getting for and what you get for it, let's talk about fee first. The management expense ratio is a modest 0.20%. I would say it's overall quite minimal. And if you compare that to the typical mutual funds out there, it's 1/10 of the fee that you pay for a mutual fund. But what you get as a result of that, you get the ease of investing. My wife and I, we don't have to really do a lot of guesswork. We can easily pour our money and invest into this single ETF, and automatically we are getting already that global diversification through it. And on top of that, they do frequent, regular rebalancing, which means through that continuously monitoring, automatic rebalancing, they make sure that the exposure to different geographies and different markets are stayed within a certain threshold, and you're not getting overexposure to, let's say, US, underexposure to, let's say, Canada and others. Currently, their target is hovering around that, you would say around 45-ish or to 50% for US. Canada is hovering around at 25%, and the rest of the countries as well, top countries exposure that you are getting is showcased for you here. You can hover over different countries as well as show more. And when you also download the file, like I said, the download list of holdings, it tells you exactly the list of companies, the weightage, as well as the country that they belong to. I hope that answers the question and clarifies why we are mainly investing in XEQT in our portfolio. Now, there are other products similar to that out there. I know Vanguard provides, like, for example, VEQT. BMO offers something like ZEQT, and there are a number of others as well. Fidelity and others have introduced. These are typically known as all-in-one ETF portfolios that you can search for and get to know more. I had done a while ago a video on my channel talking about different ETFs and whether it's dividend ETFs, country-specific ETFs, and different types, and went into further detail. If that's something that interests you, I definitely encourage you to check out that video. Lastly, if you enjoyed this video, I really appreciate if you can give this video a thumbs up, and you can also follow my journey and support me on Blossom, where you can see easily exactly what stocks or ETFs I'm adding to my portfolio at what prices exactly as they happen, as well as, I post a lot of content. I'm quite active actually on Blossom these days. I would love to see you all on Blossom app as well. Just to quickly as well show you, I'm going to quickly go to my portfolio, my profile, and show you a little bit of the posts that I've had. Like, for example, here, talking about some pin posts, the last updates, where the portfolio is sitting at and how the amount is growing. I also captured the journey. Like, it's nice to see as well how over time the portfolio size is growing and the portfolio size is actually changing. Really, hopefully, this acts as an encouragement for those of you who do not have a lot of time to do stock research and want to just build a solid portfolio for yourselves, and seeing how actually simplification to the power of ETF investing can do wonders over time, as long as you're consistent with your investment, as long as you're stay the course and do not really panic as the markets go up or down. I hope that's beneficial. If you have any specific question for my portfolio or anything that you'd like me to elaborate further on, let me know. Of course, this is not financial advice by any means, but more so me, somebody passionate about investment as well as early retirement, talking about it and sharing my experience through this channel. Thank you so much as always, and I hope to see you all next time.